planning your cash flow. So as many of you guys probably already know, cash flow can be a problem in physical product business models. Today what we're going to go through is exactly what you should expect in terms of your first order and then your reorder. So at what point are you going to run into cash flow pinches? When should you be planning your reorders, and how should you be funding this business venture? How should you be planning and attributing that initial capital, as well as setting expectations so you don't feel disappointed if you haven't regained or recouped enough of your initial investment to fund your second order. So with planning your cash flow, this is all about entering the market with a long-term mindset and planning for your reorders. Why you need a long-term mindset here. Your first order is often not profitable due to advertising, and this can cause the cash flow pinch. Remember, no one knows your listing at the beginning, and you need to pay for that visibility in order to make sales and bring that organic ranking up slowly. Remember, the organic ranking is the one you do not pay for. So if you can solidify that at the top of results, you can reduce that ad spend later and then of course enjoy your profits. But at first, a lot of your profit, if not all of your profit and some of the cost, is going to go into ads so that you can get that initial ranking moving. That organic ranking does take time. It's not instant. It's not after running ads for 3 days. It's more like running ads for 3 weeks. You want to plan for your second order. This is also very important and why you need a long-term mindset here. So the overall steps we're going to get into detail now, but determine what that first order is going to cost you. Understand that you won't collect all your profits on the sales of that first order, and you need to work that into your projections on the second order, etc. And then keep some of your initial capital aside for your second order. We'll get more into that as well. I wanted to give you guys a real life example, something that is very, very practical and that you could really relate to your own products and perhaps those that you're looking into as potential products. So here we're going to have a landed cost for our product of $6.50. Remember, that's everything, manufacturing and shipping. Our FBA fees in total, so that's our fulfillment fee, our picking, packing, handling, all the rest, as well as our referral fee, usually 15% of the sale price. In this case, it's $8.46. Our projected sale price is $25. Our projected profit and margin is $10.04 or 40%. So for order number 1, our first quantity is 500 units with a landed cost in total of $3,250, and total FBA fees after we sold all of them is $4,230, with projected sales, so our total revenue of $12,500. Our projected profit, so we do get back our cost of goods, our $3,250, but above that, our projected profit, if we weren't doing ads or promotions or anything, would be $5,020. So here we're going to start paying for ranking, and that's where that starts to impact that $5,020. PPC is the missing piece in our puzzle for now. So you start out with a PPC campaign on Amazon in order to get those sales. And this pay-per-click advertising campaign is going to eat up a lot of those profits we just discussed. And that's while you establish your organic ranking for those keywords that you want to be at the top of. You're going to pay for ads on those keywords so that your organic ranking slowly starts to move up from page 11 to 10 to 9 to 8 to 7 as you make sales from those ads on those keywords. While paying for ranking, you're going to start selling, let's say, 8 units per day on average. So after running everything for 8 days, 10 days, 12 days, you start to see a pattern that you're selling 6 on this day, 12 on this day, 11 on this day, 8 on this day, and your average is 8. You're left with 62 days left in inventory based on the 8 units a day, and your lead time is 5 weeks. That's how long it takes to place your order, get it manufactured and shipped by air in this case. So that's 35 days. So for simplicity, we're going to say our last possible reorder point is actually at 25 days in. Once we've sold 200 units, based on our average, our last possible reorder point is at that point. Otherwise, we will run out of inventory before restocking. Up to the 200 unit points, all of the funds that we're actually meant to be taking out ourselves are going to go to paying for ads. Let's say our average cost of sale, which is an advertising metric saying, how well your ads are performing, is 70%. And if our ACO is to 70%, that's going to eat up a lot of what we would take. In fact, if what we would pull out of that is 40% profit margin and 30% cost, 70%, if that's what we would take out of the sale price every time we sell a unit, well, if our ACO is to 70%, that means what we would be taking out is going into ads. So for now, that is the case. And now we need to reorder. We're at the 200 unit point. We need to reorder. And yet we haven't collected back the funds we invested in the first place. And this is where the cash flow problem appears. So our strategies, what can we actually do? So keep some of your initial capital for the second order. I definitely advise this. I think it's very important. If, for example, you're looking down this venture with $6,000 and your first order would be $3,000, don't think of it as, okay, well, I can do 2 products. Think of it as, I'm going to do 1 product. If this runs, with a $3,000 order, I'm going to make sure I'm ready for that second order, which could be even bigger. Number 2, very important, negotiate payment terms for that second order with your supplier. Now, most sellers do this. I generally get 30% up front and 70% at the end, but you can get even better terms if you negotiate or do bigger quantities with them. Generally, you'll be able to pay 30% up front. For example, if you're using Alibaba Trade Assurance, you pay 30% up front with a credit card and then 70% when that's completed and ready to be shipped to you. So you do have waiting time between those 2 points in which to make up more capital, either in your own right or from your sales that you're making on Amazon. And we'll get into that now. So for order number 2, we decide to actually up the quantity because our first 500 units are selling so well. We feel there's less risk in this now. It's a sure thing. It is definitely selling every day when it's visible. So because we're getting that organic ranking up, we're pretty certain this is going to sell when it's visible. So why not up the quantity so we're not continually having to order, and we can increase our profit margin this way by doing a bigger bulk order. So we go with 1,000 units and we get it at $6 per unit landed instead of $6.50. We pay the 30% of our second order, that's $1,800 of initial capital that we kept aside. We planned this in and we put in that additional $1,800. Remember, you have another 5 weeks before you need to pay that other 70%. Now at this stage, the first order has started selling organically as we've been able to rank it for keywords using those ads that we paid for. We optimize our ads and reduce that average cost of sale to 15%, and we also reduce our ad spend on some of the keywords that are not profitable, and that we really optimize this and focus in on the exact keywords we want to show for and only those. We collect our full cost of goods sold every time, so basically we return our initial investment to us every unit we sell, and that would be $6.50 per unit. We collect 25% profit when we sell a product via ads, and I'll explain this a bit further. To demonstrate this example, at this point in the product life cycle, we are selling half of our inventory via adverts, and we're selling half of our inventory via our organic listing. And now the key thing here that I want you to take away from this is that anytime you make a sale through ads, you're going to take your original profit margin, so in our case 40% here, and you then deduct the current average ACOS that you have for sponsoring that product. So in our case here we have 15%, which is a good ACOS. Now, if what we would do to understand our profit margin when selling through ads is we take 40% minus 15% and we have 25%. That is the profit margin we make when selling through ads. Because remember, sometimes you get clicks that don't convert and that impacts your profitability through ads. In any case, it's 25% profit when we sell through ads, and that equates to $6.25 per unit that we sell. On the other side, we sell straight through the organic listing as well. That is not sponsored. That is through keyword indexing and number of sales that we've managed to solidify a good ranking on results pages for certain keywords. And when we sell through the normal listing that is not sponsored, we gain a 40% profit margin there, which equates to $10.04 per unit. So overall, after selling 200 of the remaining units, we have to pay that 70% of the second order that is busy arriving. And we sell 200 of the remaining 300 units in total that we have at the warehouse. And therefore, of the 200 we sold already, we collect 100 of those. Remember, are through ads. 100 of them are through the organic listing, 50-50 at this point. The 100 through ads gives us back $1,275, and the 100 through the organic listing gives us back $1,654. So our total is $2,929 that we've collected back in that short space of time. We now pay the 70% of our reorder. That's order number 2, and that's $4,200. So we're going to use that recouped $2,929, and we're going to add in another $1,271 of our initial capital we put aside. So now order 2 is paid, shipped, and processing into the warehouse. So just to recap, because I know there's a lot of numbers here. At this stage, you've input the following capital. The first order cost you $3,250. Quite simple. The second order, 30% payment, you paid in full, is $1,800. And a portion of the second order, 70%, you also paid, which was $1,271. So our total capital input overall is $6,321. So although we thought at the beginning, okay, our first order is $3,250, most people feel like, hey, I got $3,250, that's it. In fact, we need an additional $3,000 here. So you can see $3,071. In order to actually effectively scale that business if it starts running the way we want it to run. Now, there are anomalies to this. There are certain products which don't need a big ad spend, which just run without having to need all of the ad spend and obviously minimizing of profit. So as a general rule, you're looking to try have your first order cost you half of all of your initial capital, or at least 3/4. And that doesn't mean you need to have all of that in front of you right now on the table, but it does mean you want to plan towards that. Try and have excess capital for the cash flow pinch situations. And whether that's through using credit effectively, invoice factoring, lending, selling something extra, saving over the next few weeks, that's up to you. But do try plan for this as per this example, and then you'll be well on your way to scaling this business. Now we're about to actually get to the fun part. So at this stage, we have a higher profit as we have lessened our cost of goods sold. We went with the bulk order. And so our landed cost is only $6. FBA fees $846. Projected revenue of $25,000, and our projected profit is now 42.16%. So $10.54 per unit. Here it gets fun. So we optimize our ads further and we reduce that spend. We get ACOs all the way down to 10%, which would be excellent. Even 20% is very good. We make many more sales via the organic listing though. That's where we're focusing now, and that's of course at full profit. Here, 60% of our sales are all from the organic listing and 40% through ads, and you can actually have a far better ratio than that as well. We regain the full cost of goods sold, that's 6 grand. We make a profit of 3,216 when selling through ads, and we make a profit of 6,324 via our organic listing in total. So our total revenue is 25 grand. Our total takings, that is getting our cost back, getting our profit, is 15,540. And our total profit, 9,540. Our effective profit margin overall, considering the ads and everything, is 38.16%, which is very good. And then you can see we have an ROI of 159%, and how you can actually calculate that: money gained minus money spent divided by money spent times 100. So now you have enough inventory for 100 days. And so from this point, you're going to be able to place and pay for that next 30% order out of your earnings from these sales. Next, you'll be able to place and pay for that 70% of that order out of your sales. Unless you scale to some insane level, you're going to be able to now roll this without inputting more initial capital. Now, this order is also going to return to you $15,540, with which you can choose to either reinvest entirely and scale up for a better cost per unit and better profit margins and having to reorder far later, or reinvest partially and draw your profits from this, or reinvest partially to keep this moving and then use the remainder to start product number 2. So I hope this makes sense, guys, and that you can apply this to your next potential product in your next reorder. Please do subscribe below, turn on that little bell notification if you enjoy this type of session and if you got value from this. Thanks for watching, guys, and I'll see you in the next one.